Hello, Warriors. Brock, Ren, everyone. Okay, I think we have a shortened session today. Shalom. Hello, money. So, British pound. I still think that we need to make another high here because of this confirmed high on multiple time frames. 4 hour 2. Confirmed high. Then maybe I'll attempt it. Dollar's been real whippy. Euro's been diverging since this high, and I think we finally just took out the high of the move on that candle. No, not quite. So we haven't done that yet. It's still over 120. But this is looking, a little suspect here. It's stronger than cable. So I really don't look to do anything new today. Maybe Friday. I believe Friday is a full session. We're going to be closed tomorrow. Let's see. Getting a little bounce in the gold. And the S&P's tried, but have not made a new high yet. I guess until we close back under here, although I tried it last night with stops over the high of the move. We're going to have to get back under this 3610 level or so to negate this breakout that's 25 away. I will say this, that as close as the S&Ps were, and NASDAQ began to start outperforming yesterday, with all the hoopla and everything, this could still be a failure up here at 78.6. Maybe I'll try it next week. Something I've noticed, like I've said here before, is that markets will wear you out. That's why you probe and protect. You never know which high or low is going to be just a high or a low or a more significant high or low until you look in your rearview mirror. VIX, talked about it with Steve yesterday, and it tried to probe. We have this pretty nice formation here in the VIX. I would not be short volatility, okay? Starting to get kind of a wedge look here. See that? You could use the 50-day moving average as maybe a wedge line. So back over 23.30, there's a lot of space up till 28. Hello, Monica. Japanese yen is not giving up as much of its rally. Look, the dollar's, made a new low, diverging, but made a new low. And here's the point that I'm making. I think you still have to be long yen. Not from anywhere, but if I'm right about where we're going, you could buy it anywhere. Maybe we're just gonna get one more test down here. But I know the week's not over until Friday, but I think we're having a decent week. The off number was 104.55, so pretty close to a reversal week. We'll see what happens Friday. Almost looks like you have a 1 and a 2 and still push up. And
remember, some people say I'm from a tactical picture. If you knock on the door enough times, you go through. Here's the other side of that story. If you knock enough times and the door's locked, price is going higher. All right, what else have we got? Oh, yes, the gold mining stocks.
I don't know who that is.
Down to make everyone.
What is that?
On this, I get your plight. I totally understand it. But this is a red flag. If you see.
It must have been from my end. Okay.
No, we got it.
Oh, it was you guys?
Wasn't me.
All right.
Yes.
All right. So someone's got to.
Yeah.
I think sounded a little bit weird there, but it wasn't.
All right. All right. Well, kind of a quiet day. Blake, I'm not really doing anything. I know a lot of people wanted to buy gold at 1800. They got their chance, but I'd be surprised to see us do much better than 1840 to 60 on a bounce. So that's it. Not a ton of new ideas. I don't do a lot of trading on holiday broken up weeks. So today is a shortened session, right, Blake? And Friday's a full session.
Is that the other way around?
Oh, I don't know. Today full?
You know what? I thought it was the opposite of that, but let me double check that. Hold on.
All right. Because sometimes they close early before a holiday, so it's the other way around. Okay, well.
I think it's the other way around, but I'm gonna double
Mark
check.
Harvey's saying it is. Okay.
Okay, yeah.
So we have a full day today. Okay.
It closes early on Friday. Yeah.
Okay.
I'm just
all right.
I'm just double checking. So because look, you've been doing this for like 40 years. I've been doing this for like 20 some odd years. And I every holiday I have to go,
yeah.
I don't remember, I mean, it is the way it is, you have to go back and you have to look because it's just not normal. So we have, I'm looking at the NYSE, but I think it's a full day today.
Okay. Thank you, buddy.
Yeah. So, but that doesn't mean that that there won't be anything. There won't be anything happening. That doesn't mean that at all. And Stelios just pointed out in the chat room, which is very, very true. There's a ton of data coming out. Just a data dump coming out this morning. We have preliminary GDP, unemployment claims, durable goods. And then a little bit later, we have University of Michigan consumer sentiment, new home sales, personal income spending. And then we have the FOMC meeting minutes later today. Is the market going to care about any of this crap? I don't know, but it doesn't mean that we shouldn't be aware that it's coming out. Like
we have mind readers in our attendees.
What?
Tom Hand is a mind reader.
Huh?
He says Dale just don't want to trade. Ha ha. He wants a holiday.
That's exactly what. Who doesn't?
He's a mind reader.
I know, who doesn't. So the thing about what was I going to say? Watching for outsized data is, a great example is on Monday. We had this really strong PMI data, and it kickstarted a big gold down move, and then after that we saw a big dollar rally, which I was caught on the wrong side of, but that started with an outsized piece of data. So and I've been around the markets where you get it's like the domino effect. You get one thing that moves, and then all the algos start going, oh, it moved that. Oh, it moved that. And then it just, it's like a domino effect. It just starts moving everything. And that's what we saw on Monday with the PMI data, which typically doesn't, it was a market PMI. It wasn't, market with a KIT. It wasn't like a piece of data that typically will move the market. No pun intended, but it did. And no, it wasn't. I thought it was a market PMI, but it wasn't. It was let me double check that. That was, I guess it was just a regular PMI, but still it was a I thought it was a flash PMI. Anyway, it was way bigger than expected, and then it moved the markets. And so we could get something similar to that today, without a doubt. So anyway, we just have to be aware. But I'll tell you, one of the things that did happen overnight, Dale, is that we saw a false breakout in the euro. At least thus far. I wouldn't. I don't know if I want to say it's a complete false breakout, but we did break above the 119.20, squeeze some people because remember this was resistance, so it did take out the stops, and then we came back down. We saw the very similar price action in the Aussie yesterday, where the Aussie broke through the 73.40, took out stops, and then came back down, but then we recovered. I'd venture to guess that we'll probably recover and close back above 119. So let's talk really quick, Dale, about this. I want to talk about, like, before I get into the bias chart, because now that we put the bias chart on ForexAnalytix, it's imperative that I do the bias chart every day. Now it's kind of like a forced thing. Before it was just kind of having fun with it. Now it's going to happen. No, I'm just kidding. I think this is great for us to put up every day. So I'm going to be developing that here in a second. But I want to talk about the dollar, and I want to talk about the consensus. So everything that we see and everything that we hear, and just so you know, every bank is bearish to the dollar going into 2021. That in itself makes me a little nervous, right? The consensus trade is sell dollars, buy gold, buy Bitcoin, whatever.
Yeah.
And I can't argue the consensus. I can't argue it. I mean, you look at the dollar and you go, okay, we got Janet Yellen coming in. We're going to have who's just going to, who we think. Now, remember, she is Treasury Secretary. Treasury Secretary will have control over fiscal stimulus, more power in fiscal stimulus. The Fed, which is Jay Powell, will be, controlling the Fed, or monetary stimulus, if you will. So with two very, money printing monsters behind the wheel of both of those levers, the risk of a dollar sell-off is pretty. I think the risk of it is pretty real. But remember, the Treasury Secretary, which will be Janet Yellen, will be in charge of, will be, to protect the dollar. That's what the Treasury Secretary does, is believes in a stronger dollar. So, here comes a different role for Janet Yellen, and it's going to be really interesting to see how she takes on that role. But I will tell you that the dollar, because of that, because of where equities are at all-time highs, you got, obviously gold, and and gold, by the way, found its support at the 200-day moving average, which we'll note here as well. It's at least finding some near-term support at the 200-day moving average. But all in all, we are looking at a dollar that realistically seems like it should go down. I mean, it should. Then you got Brexit, you got all these technical, the Brexit that should happen. Then you have all these technical formations that, look very, bearish the dollar. I understand the consensus, and it's hard for me to fight that battle of going against the consensus trade, right? So the only thing that will stop the consensus trade is if stocks continue to rally and eventually turn. And right now we have a bull flag pattern. We're breaking out. And I think that the market is at risk of, breaking higher, but finding some resistance probably as we close in on, 4,000, and maybe a little bit lower, maybe a little higher, but it looks bullish. And like I said, the only thing that's really going to turn the dollar at this point is if stocks actually peak and reverse. So, but everybody's on board, and everybody is in the sell dollar camp. Everybody. Everybody. And the scary thing is about that, Dale, is that the euro hasn't gone anywhere.
Yeah.
I mean, yeah, I mean, we this last couple of weeks we went from 117 to 118, 119, but really look at it all summer. We haven't gone anywhere.
Right.
Yet
Same
you got
here.
everybody bearish dollars
because of the Fed, and then throw Yellen on top of it. Everything.
We got Biden, and he's not going to get too. He's going to probably going to get some stimulus through, or there's less. We don't have to worry about Trump now because he conceded, and we got a transition team, and
In fact, Blake, try and think of a fundamental narrative that's bullish the dollar. It's hard.
There is none. There is none, and that's what's scary to me.
Yeah.
And then you look.
There will be one once the reporters will tell us later.
Yeah, and
if it happens,
my opinion, it'll be risk off. And overall, do I think that the euro is going higher? Yeah, I do. I just can't figure out if this is happening first. This is it, right? I'm gonna draw it out for you guys. I can't figure out if this happens first or this happens first.
Yeah.
But I'm not convinced that this can't happen. If I was, I'd be buying euro right now. I mean, the stock market is breaking out. Why isn't the euro above 119? And why isn't it holding gains? I just, for the life of me, like I was looking at it last night and I did not buy it, but I was thinking, okay, here we are trading at 119.10 or 119.09 before I went to bed, something like that. And I'm like, I bet you when I get up in the morning, it's going to be trading at 119.50. And then, when I got up this morning, I'm like, wow, we're trading at 118.82. That's weird. Why, why isn't it not breaking out? I don't know. But anyway, I just, again, I just wanted to say, and every, when I say every, I even had, and I know I've said this over the last several days. Yesterday, the one analyst that we have at Bank of America, he even chimed in and said, every bank is bearish the dollar into 2021. And I know I've been reading it. Every piece of analysis that comes by my desk, everybody is bearish the dollar. Everybody. Not one that's not. There's not one that says, oh, I see the dollar strengthening going into 2021. So we're just going to see how that works out. Right? Yep. That should work out pretty well. I'm joking. So anyway, for today, where's support for the euro? Good question. I think that, dips down to like 118.50 are probably going to be fairly well supported. You got a little spike yesterday down to 118.40. So I'm going to go ahead and put in 118.40. And then obviously we got to, type in 119.30. That's obviously, resistance because we spiked up there. 119.30. So should you be buying it now? I don't know. I guess. Cable's got a nice little triangle pattern. We're holding above 133. So I would say 133 is support. You might even get below that. 132.90 might be a better, just in case we just come through the support levels, just to whack some stops down here, but we hold these highs because we did that yesterday. You can see how we whacked a mole on the stops on the upside and then we came back down, or last night, excuse me. Same thing can happen here. We could, whack a mole below the lows and then, still consolidate in what we see as a triangle. I'm getting closer to putting both of these into bullish categories. It's close. I just got to see price build a little bit. So anyway, 134 is resistance. Okay. Aussie dollar. Okay, so the Aussie, we're holding the lower end of this, this previous resistance zone. We're holding it. And so I'm going to write down that 73.23 is, or 73.20 is support, and 73.75 is resistance. And I gotta do it because it's inching that way. I've got to, you know, put it into a bullish category now because it's really trying. It is. Okay. Now the Kiwi continues to hold up pretty well. We're still at the 161% extension. We haven't moved for a couple of days really from here, but you guys know, as long as we're above 68 cents, there's no reason to be bearish. So support right now is 69.40. And resistance is 70. And it is bullish. I mean, it is. I've been hoping, you know, but it hasn't come, but I've been hoping for a move like this, you know, come out of the wedge, break down a little bit, shake some of the bulls out, and then get long. Just, you know, hasn't transpired. I've been waiting for it for all week long, and nada. Dollar Canadian. Dollar Canadian's getting really close to, I know we had this false breakdown below 130, but you know, if the dollar here's the euro back above 119. If you can't, you know, sometimes if you just can't, you know, beat them, you're going to have to join them. You know what I'm saying? What I mean by that is the dollar Canadian, it's going to eventually fail. If like the Aussie makes it above 74 cents, the Kiwi makes it above 70 cents, this will have no choice. We'll have no choice in the matter. We're going to have to go down. And then it gets scary because, you know, then you're looking at cliff diving in the dollar Canadian. You know, when we start, you know, getting below 129, you know, these supports here, you start threatening moves into the mid 120s. So I see why the bulls are fervently defending the dollar Canadian. But with the rise in crude oil, with crude breaking out, you know, I've got to imagine that it's more of an eventuality than anything. You know what I'm saying?
Yeah.
So you know, I'm going to just say that I you know, you got to be real careful here. I think resistance intraday, we'll probably have to pay attention to this level here, which comes in at 130.40 roughly. And I know it's tight, but this is really key. And if we break through 130, and if we well, I guess I should probably write this down too, because if we break through 130, let's see, 78% retracements right there. I'm going to write it down, but it's all very tight. Okay. Let's see, dollar mex. So the dollar Mexican peso holding above this support, and we've managed to make a higher low, which is good if you're bullish, but I actually think we're still just developing like what's going to be eventually a bearish flag. So 920 is going to be, or a bearish wedge, excuse me. 920 is resistance now. Oops. Oh, did I say 9? I'm sorry. 20. I don't know what I'm thinking here. 2020. It's going to be resistance. Support is 1995. That's what I meant to say. And you know, the dollar mex, I tried to play it on the long side yesterday. I just took a small loss on it because I was playing the bullish, believe it or not, I was playing a bullish hammer here. And because it didn't follow through, I just, you know, took it off for a very small loss. But, I was trying, because it looked like it was going to do kind of a counter trend move. But the thing is we're just developing, a flag now. So the euro back above 119, in case you're missing it. Okay. And that, for that reason, I think I need to put this in bearish until proven otherwise, is basically what I was going to say. Dollar Swiss, not doing anything, but I guess we should say that the Euro Swiss is breaking out. So that's something that you need to pay attention to. 91.50 is resistance. And that's just because this trend line continues to descend. And so now it intersects with horizontal resistance. So that's going to be at 91.50. It'd be bullish if we broke above 91.50, but that is resistance. And support is, 90.75 and then, 90 cents. So okay. US dollar, Norwegian krona. The bearish wedge is playing out. I'm just trying to, get a rally to sell into. Yeah, it's not happening. I'm trying. It's just not happening. I think everybody and their mothers, brothers, uncles, sisters, monkey is trying to trade this trade. So 8.95 is resistance. And I missed it yesterday. I wasn't paying attention. I was focused on other stuff. So next support is going to be 8.82. And you can see how, these different pairs are now starting to flip colors to trends versus not being that way over the last, week or so. 92.80, 92 cents. Okay. I know we spiked below, but we're just going to still write 92 cents. That was because of the euro. So, oops. Okay. And this below here is 91.80. Okay. Dollar yen. You trade it because I don't want to trade it. Dale will trade it. Dale will trade anything. Dale, you trade it. I'm not trading it. There's really nothing to do here. 105 is resistance, support 103.70. We're in a range. Okay, so gold. I'll just do support gold. 17.
We have one minute of data, by the way.
You know what? You can kiss my butt. So I'm just kidding. All right, fine. Whatever. Let's. How's it going, Stel?
I'm very good, man. Thank you. And you?
Well, I'm getting ready for Turkey Day, so I have to go get a bunch of green beans. That's always exciting.
So GDP, basically, we have
this year. My sister and her family is my sister and her husband are cooking the turkey, which is great because the turkey's 5-hour process, and I love pulling the gizzards out of the turkey. Oh, it's so fun. Yeah, it's gross. Anyway, I'll do the carving. That's fine. So, yep, here a bunch of data. This is Bloomberg. This is Data Flash that comes with your ForexAnalytix subscription, by the way. And here's the difference. Data Flash, $119, or if you even have the light version, $19 a month. Bloomberg, $2,800. Data out, jobless claims, U.S. retail inventories, wholesale inventories. You can see durable goods beat over here, and it came in faster over here. I mean, wow! Look at this movement. Wow! 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 Wow. We're still waiting on PCE order PCE still coming in. We haven't seen it over here either. Doesn't look too exciting. I mean, jobless claims are creeping higher, which isn't good going into the holidays for those people. I mean, that sucks, right? I mean, okay. Well, I still haven't seen a lot of the data come out. So, anyway, as you can see, it's not moving the oh, here we go. GDP just came in at annualized at 33.1%. Durable goods orders is 1.3. I mean, because we were looking at 0.9, so that was better, but we already knew that. We still haven't seen it as. I want to see the advanced GDP. Or do we get that over here? No, I don't see it.
Dollar selling off on it a little
Here
bit.
we go. Advanced GDP quarter over quarter, 33.1, which is actually oh no, we had that. It was over here. But still, it's basically in line. And then there's dollars coming off a little bit, but not a lot. Okay. Maybe it's some of the revisions that have moved. No, not really.
Gold's popping a little.
Gold is popping a little. Thank you very much. Dollar yen's coming off just a hair. Euro dollar.
Good call on Euro.
I mean,
back there,
right back, right?
Yeah.
I figured it wouldn't stick, but anyway.
What are you doing with EG? Bro, you have a view?
I was short it this morning. I shorted it at right here at 23.
Okay.
And here's the thing. Do you believe Brexit's going to happen?
You mean hard Brexit?
Well, do you think there's going to be a negotiated Brexit, or do you think it's going to be hard?
I think it's going to be flaccid.
Really? Okay. Well,
You think it'd be hard?
I don't. I think it'll be kind of
Oh my God.
too.
I know where everyone's
so
maybe I'm just projecting.
But
oh my God.
But we do have really, you can see this really key support here.
Yeah.
And we have a wedge developing. So I sold it overnight at these levels, and on a move below 88.60, it's bearish. Now, does that mean it's going to break down right now? Doubtful, right at this moment. But
Richard says 80-20.
Huh?
The odds, Richard Engel saying 80-20. 80% Brexit deal, 20% no Brexit deal by 12/31.
Yeah, I'd probably agree with that. So
that's the Betfair chances, he says. So
what?
That's what the those are the
betting odds.
Yeah, those are the betting odds on Betfair. I remind you that Betfair is actually a free market, right?
Yeah.
So players take both sides of the bet.
Yes, it's the betting odds side. Yes, and look, I think it's probably a good chance. And so if you're asking me how I play the euro pound, I'm playing it on the short side here for now. And I think you can play it all the way back up to 90 and still be on the short side. You know what I mean?
Tell you, if it takes out these lows, it's like triple bottom.
Oh, no, it's not just a triple bottom, Dale. It's go all the way back to April of this year.
Yeah.
So
that's
see this formation. See this right here? I mean, that's how important the support is. High, high, low, low. So it's a 1, 2, 3, 4, 5. It's hit there 5 times since June. So yeah, I mean, that's how important that support is
Yeah.
at 88.60. And so if we take out that support,
Going to 83 or so, 85 or something
well,
big to
I
the
mean, I think
downside.
that we, you know, trade down towards 87, you know,
Yeah.
I think this is realistic.
Yeah.
Right.
Okay. Yeah,
But
it seems like it's critical.
it definitely. So anyway, I would let me finish up really quick with the bias chart, and then I'm gonna give it over to Steve and Stelios and you too, Dale. So let's go over to gold. Okay, so resistance now, and this, by the way, this could be flagging. So just before you get all uppity about your, you know, oh, gold's bullish now, it could be flagging. So don't, you know, be a little careful here. I know everybody wants to buy gold on a dip, which is fine. You know, I believe in gold too. So, and the 200-day is holding. We don't want to see the 200-day break. Resistance, though, will be any move back up towards 1835. 1838 was actual resistance, but I'm going to write down 1835. That is key on any rally. Last but not least, the S&P. We do have a bull larky flag pattern going. So we have a pennant. Where's my S&P? Did I just lose it? Oh, there it is. So we have a pennant, and so obviously, you know, resistance now is going to be 3670. That'll be the all-time highs. I don't see why the Dow can't see, you know, 40,000 by Friday. So why not? I'm obviously being sarcastic. This is resistance. Support is at 3,600 now. And I think we had that as bullish yesterday. Well, let's find out. Let's find out in the ForexAnalytix bias chart. Oh, yeah, I did have that as bullish yesterday. So we are still bullish today. Gold, I did have this as bearish. And I think we have to stay bearish while we're below 1835, by the way. Just, I know the 200-day moving average is providing support right now. I understand that. I still think that it is bearish while it's below 1835. Okay, your bias chart is finito. So, Stelios, if you want to go ahead and grab a screenshot. Good morning, Steve. Good morning, Stel. How are you guys?
Good morning.
Good morning. I've already uploaded it to the site. How quick am I?
Very fast. So that means
Come on.
That means if I'm looking, oh no. See,
You have to refresh.
I know I have to refresh. It just hasn't. See, we can actually see it. So once you click out and you click back, it refreshes, and boom, there you go. All right. So
awesome.
For those of you that don't know, ForexAnalytix has added a few new features this week. Thanks to Steve and the development team, we've got live charting, which is really nice in ForexAnalytix, right? So you got your live charts here, which is cool. Then you have all your analysis, basic technical analysis, Elliott wave analysis, then you have you have all the normal features like your news feed from Live Squawk, all the and I use this risk management tool all the time. Most important thing with ForexAnalytix is our community, and that's who's right here. And you can see there's been a lot of chatting just from this morning. This is going to be from me getting up 2 hours ago, right about here. Good morning, everyone. That was 4:42 this morning. And that's on a pre-Thanksgiving. That's a pre-Thanksgiving day where not a lot of people are out. So make sure you come join us in the chat room. We do a lot of chatting in there about the markets, and we stay active. And if you want to be part of the ForexAnalytix community, right here where it says ForexAnalytix sponsored, if you open a Pepperstone account, you have to use this link right here. So I'll say that again. You got to use that link right there. If you open a Pepperstone account, and if you're outside of the US, in Canada, you can possibly get ForexAnalytix for free for 4 months. 2 months when you open an account, 2 months once you do 5 lots, standard lots of trading, which isn't much. And
yeah,
then,
within the period of the first 2 months, so it's definitely not a lot.
Yeah, it's not a lot at all. And then if you're in the U.S. or Canada, you still you can try out ForexAnalytix for $1 for 10 days. So make sure you take advantage of it, guys and gals. I want to say happy Thanksgiving to you, especially to you all, for your support of ForexAnalytix. I'm always thankful for my family, my friends. Thankful for the team here at ForexAnalytix minus Steve. I'm thankful for joking Steve. Steve is my favorite, so I have to harass him a little bit. And sorry,
I'll file a suit tomorrow.
What's that?
I'll file a suit tomorrow for harassment.
And Stelios, I'm sorry. Steve is my favorite. Sorry, Dale.
I know, it's okay.
But
he has to be somebody's.
I just at least he is somebody's favorite. That's good.
Yeah.
Because he's not his wife's favorite, that's for sure.
Oh yeah, absolutely.
He is.
No, but no, and I'm thankful for all of you guys.
His kitty loves him too.
I'm thankful for all of you listening in every day and supporting ForexAnalytix. Without you guys, we don't exist. So happy Thanksgiving. Even if you're not in the US or Canada, or you're not in the United States, you're outside of the United States, it may not be Thanksgiving for you, but this is the time where we have to reflect. We do reflect and think about, thankful for a lot of things. And I'm definitely thankful for all of you. So you guys have a wonderful holiday. By the way, I got to say this. If you are a ForexAnalytix subscriber, the basic technical analysis will be coming in a little bit late today due to a conflict that I have scheduling wise. I'll be pushing it out in Asian trades. So just, if you're usually going, I get the basic technical analysis and I know Blake does it, it will be coming late today, a few hours late, just like I said, scheduling conflict. So don't worry about it. It will be there. And then also I wanted to say one other thing. We won't be broadcasting tomorrow, but Friday, Steve and Stelios have they've decided to let Dale and Blake take the day off and broadcast themselves, right?
Dale actually said he's going to be here.
What?
Yeah, that's what he said yesterday.
Yeah.
He's a masochist.
Yeah.
I will have family staying the night, so that means I'm going to have at least a couple of glasses of wine late. So I will not. So you guys
have a great holiday, Blake.
Happy holidays to all of you guys, and I'll catch you in the chat rooms Friday a little bit later, and if not, I'll see you guys on Monday. Have a great day.
Thank you, Blake.
All right, buddy.
Thanks, guys.
Thank you, Blake.
Thanks, guys.
Steve's gonna be me and you and your cat on webinar.
No, I'm going to bring both of them to make up for Blake missing.
Awesome.
So do we have Grega with us? Did I hear that?
Yes.
Oh, wow.
Of course I'm
There
here.
you go.
That's amazing.
Hello,
Grega.
I'm in a hotel room, so I'm quite boring. So I just decided to step in.
Okay,
Excellent.
nice.
It's always great to have
I'm
you.
not gonna.
You're going to do analysis in the hot tub today?
I'm not going to ask you what you're doing in the hotel room. As long as your wife is okay with it, I'm okay with it, bro.
Sure. Let's do it.
Okay. Then why don't you grab the screen and
It's all yours. I wasn't going to say much. I mean, nothing really material has changed. I'm still fascinated by the fact that Yellen is now going to be Treasury Secretary. And to me, going from the Fed to the Treasury, they're supposed to be independent, and they are independent. And people say, look, it's a different role, but it's a bit like regulators and then moving to banks. You just can't. I don't think you should be doing that. But
which coincidentally happens. I mean, it's
coincidentally, yeah. And they go, they're regulating, and then they go with a nice 7-figure package. And there's no.
But of course, expecting to go with a 7-figure package afterwards, I'm sure that they still do, an amazing unbiased job before they switch, right?
Oh yeah, of course. Okay, Grega, it's all yours, man.
Yeah, sure. Thank you. Okay, so I will just look at some major markets here, like usually. So we will start with the euro dollar. Actually, on the euro dollar, Steve and they'll probably remember, we are still looking higher here after this complex corrective pullback from September highs. And the reason for this continuation higher is also this sharp rise away from November lows, followed by this quite sharp pullback. It was a quick one, so I'm not really sure if that was already all from this wave 2, or are we going to see another dip and retest of this 1740 area. So that's just something that we should consider if we maybe.
So perhaps a flat as a wave 2, you mean?
Yes, exactly. I mean, there are holidays, Thanksgiving. This could usually cause, meaning a holiday reversal patterns, meaning that if you are seeing something moving to the upside or to the downside, the flows will change because market participants are not so active. So I will not be actually surprised that euro dollar makes maybe just another pullback here and then continue higher. But story is the same. I think that sooner or later we are going to see retest of this 1.2 level.
I agree 100%, by the way.
If we move forward, let's take a look on Aussie. Aussie made this major breakout here back in June above this trend line resistance. So on a bigger scale, I think that this Aussie is going to make a free wave reversal, maybe even take us back all the way towards this wave 4 termination point here. But on the short-term picture here, if we first look at the daily and then the short-term, what is important is that market made very nice break out of this flag pattern. So it looks like that we have new impulsive sequence on the go. But before we are going much higher, you should realize that we can expect a new free wave setback, because from that low in November, we can count here 5 waves up. Plus, we have this recent rally moving out of this triangle here. So this was probably a wave 4. You're probably in the final part of this first 5 wave sequence. So just be aware of potential limited upside, especially as we approach these highs here from August. So same thing, maybe these two will go similar, like euro dollar and Aussie both could maybe make a pullback and then continue its direction. Now let's take a look also on what we have here regarding Aussie. Just let me check my notes. So Aussie is actually bullish, and I think that overall will remain bullish because dollar Chinese yuan is pointing to the downside. I mean, we are here falling aggressively, so I think that
almost at 2-year lows, by the way. I keep showing it frequently, trading nicely within a descending channel. All this move lower channels very nicely.
Yeah, very impulsive. So
yes,
and I think that we will also continue much lower. Just be aware of pullbacks. Maybe the first resistance, if we get a pullback in the near future, would be here. The second resistance would be maybe this spike here on 6.770. So dollar Chinese yuan is bearish. Also, it's always when you're looking at Aussie, it's very good to look at Hang Seng Index as well. And what we are seeing here, also very nice recovery, probably out of this consolidation here. So if that's the case, then this current recovery should be made by 5 waves. And looks like that we are now maybe just slowing down for a wave 4. So
copper, same deal, Grega. If you have a look at copper, it's remained, very, very strong during all this period of recovery. I think at some point it needs to take a breather. But
so it's just the same for the Aussie. So what I'm trying to say here is that dollar Chinese yuan is bearish. Hang Seng Index, at least in the short-term charts, suggests that more upside can come after this wave 4 will complete itself, and maybe that will be a new opportunity for Aussie if we also get a pullback on Aussie at the same time when we see a wave 4 pulling back towards this very nice support here from November 12th. So that's for the Aussie. Let's move forward.
Clearly, the important markets to talk about, if we're talking about the last couple of days, are gold, silver, and
sure,
crude oil, which has clearly broken out as we expected.
Yeah. Okay. So on gold, last time when we spoke, if you remember, I was looking for this triangle here placed in a wave B. We have seen a very nice break to the downside into wave C, like we anticipated. And now we are approaching the very interesting support levels here around 1800. But it's always important also to keep in mind that even if we are moving into the support zone, the pattern itself is still very important. Elliott wave is fractal, so even on a lower time frame charts, you need to see a completion of this wave C, meaning that wave C is a motive wave, should be made by 5 subwaves.
5 waves, and we're probably currently at the third.
Yes, so I think that there can be a little bit more weakness, but at the start of December, maybe already a few days earlier, we could see some potential signs of a bottom into this.
I like 70-50 as a nice downside target.
70-50, yeah, that's around this 161.8% extension of wave A, and also that's a very nice typical FIB target for completion of wave C. So we will see what happens down there. Also, drop is still very sharp. So if someone is looking for maybe for short-term trading opportunities, here it's very important to consider the risk reward. And so far, the risk can be still huge because we are not seeing bottoming wave C yet. So I
think for short-term traders,
yes,
Grega, a rebound to 1850. Yes. A rebound to 1850 should be a nice selling zone if you're looking for a short-term trade.
Yeah, no, I'm trying to say if someone wants to buy gold, what they should see.
So yeah, but I'm saying that even for people that want to trade it short term, I think that 1850 should be nice resistance to sell into.
Yeah,
you know me personally, I'm not looking to sell gold.
Hey, Grega, I'm curious. What would negate the long-term bullish count? What kind of price damage would gold need to see?
Probably a drop towards 1500 or something.
Okay.
So it's still far away. I mean,
yeah,
it's if I consider where the silver is, I will look in the silver in a second. And what's the upside potential there?
The only bulletproof indication is what level is going to get Henrik enthusiastic that gold has stopped and it's a bubble and it's.
Well, he's there. All right. So he's asking, all right, gold bulls, you asked me all the way up where I was wrong. And he's turning it around and saying, okay, gold bulls, where are you wrong on your long-term bullish count?
Okay, what kind of odds does he give me to take the other side of his market?
I just read it. I didn't. I'm just reporting it.
Once again, he's gonna be wrong. He's the perfect fade indicator for gold.
All right.
Yeah, but overall, I mean, as a trader, maybe that's more important for investors. But as a trader, maybe you don't really care where the market moves, but where the opportunities are. So
that's right.
Like myself, I mean, I would love to be long gold, but if I will not see an impulsive recovery away from the supports that we are tracking, then I will not be looking for any longs. Because only when I see a bounce from the support zone, I may consider that this correction that we are tracking has bottomed. Until then, I must realize that I'm wrong. So there will be no opportunities for me if I don't see a bounce. So actually, it doesn't really matter if I'm right or wrong. It's important what I have to see on this market to pull a trigger.
You're absolutely right, Greg. The problem is that a lot of people are trading a lot of assets sentimentally. You know what I mean?
Yeah, I know. And
they get really emotionally invested in them. Which I really don't understand. I mean, it's not that I don't love gold because I have something for it. I just believe that, fundamentally and technically it's extremely bullish. I consider, for example, the S&P unbelievably overvalued, and still I'm, I'm bullish because I see a technical picture that, shows me nothing bearish at the moment. I mean, you can hate the market and still believe it's going to, go higher, or you can love a market and still believe that it's going to go lower.
Yeah. Well, we will see. Probably, I mean, regarding the S&P 500 or stock market, those sentiment was driven higher because of anticipation of vaccine. So actually, when this one is out, you would expect maybe the opposite reaction on the market.
I agree.
Especially because whenever you have a vaccine, it will mean that economy and everything will go back to normal. And if that's going to be the case, then maybe quantitative easing would not be necessary anymore.
Yeah,
so
it will be necessary because this economy is artificially supported, but they won't have an excuse to do it at this extent.
Yes, exactly. So
and this market is like a drug addict. The more drugs it takes, the more drugs it needs just to be okay. You know what I mean?
There will.
Oh, now you're lagging.
So big numbers regarding quantitative. Okay, it's now better.
Yeah. It was temporary.
Yeah. But still, I mean, if you're just looking into the future, more longer term, I mean, if we are back on the old road with the economy, then quantitative easing is not necessary anymore. It means that sooner or later this will stop and the market would come down because it was driven higher only by this.
Yeah. So what about silver? I mean, silver, we have a little bit of a different formation. I think they're going to share the same fate, obviously, but the formation so far looks somewhat different. So what do we have here?
Well, on silver, still, let's take a look on a daily chart here.
Yes, that is the chart I was looking at. Yeah, this one.
Yeah, so maybe this wave B is going just sideways and more complex, or are we going maybe to retest these 21.60 levels and then a bounce? So we'll see what happens, but generally speaking, I mean, we have overlapping price action from the highs. So from that point of view, I think that sooner or later we will see an impulsive reversals away from the supports, but looks like the bulls are not just ready to take or go back in control here. So just be aware maybe that there could be even a dip towards $20 before we get a bounce. So, but story is actually, it won't change for me as long as we are trading away from March lows. Actually,
there are two more markets that everybody wants to see. One of them is obviously crude, which is breaking out. I mean, we both expected that. I mean, the price action was more or less telling of what was going to happen here. And the other one is cryptocurrencies. I mean, we've had a massive move higher. Where do we think we take a breather?
Okay, so crude oil. I mean, we were looking for actually this price action has been following our Elliott wave scripts quite nicely recently. We were looking for this free wave drop back to the wave 4 supports and then a recovery. And the recovery is now in 5 waves here. This is visible here on the 4-hour chart. You can see waves 1, 2, 3, 4, and looks like that we could be now in a wave 5. So just be aware that we are here at new highs. Means
and you know what's going to happen here, Gregor, right?
Yeah, we will see a pullback.
We're going to see a pullback.
When others will buy. Yeah.
We're going to see a pullback. Every bear out there is going to be, this was a false breakout, I bet you. So they're going to be selling. Everybody that bought late and had, tight stop losses are going to get stopped out. And after a pullback, we will continue higher.
Yeah, I definitely agree. I mean, it's the sentiment probably that will cut everyone on the wrong side here because of failure breakout, potentially. Because as you said yourself, I mean, this wave 2 pullback could not be far away actually, because we are moving into very nice potential fib resistance here and channel resistance at the same time around 46. Also, the current move was out of a triangle, so another indication why maybe we could be slowing down.
This is terminal in the short term, yeah.
But after all, the price is bullish. We just have to respect and be aware that there could be a pullback before another promising black higher occurs.
Okay, what about cryptocurrencies? I mean, massive move higher, both for Bitcoin and Ethereum with some lag, but it decided to follow to produce some follow through.
Yeah, I mean,
where are we now?
okay, so Bitcoin is, we all know that, very, very volatile, very hard to to be right on this market whenever we are going higher or lower. So I think that the Bitcoin itself, the better is just to keep it simple, buy low, sell high. And at the moment we are high. Okay, so Bitcoin for me, I mean, around 20,000, it's expensive. We are still seeing in media that a lot of media
Attention, media also get people every day explaining why it's going to go to 100,000
yes,
and
they're
1
keep
million.
repeating the bullish price action. Yes, the bullish price action is on Bitcoin, but I mean, you already missed 100% of it. So everyone should realize that there is a lot of risk. No one is really looking and being aware of a risk here where they will go out if the market drops. Everyone are looking, calling for Bitcoin towards 30,000, even 400,000. I mean, that's ridiculous. Even if you have very bullish view, you still need to look at the markets and the price targets step by step. Okay, so I still think that we are moving here into a very dangerous zone, especially from a sentiment perspective. There were, I mean, even back in, this was in 2017, everyone were looking for this Bitcoin and compare it to tulip mania, right? Mm-hmm. Now that's not really the case. So it means that now there are even maybe less bears than it was back in 2017. So it means that actually the next reversal could be even more aggressive whenever it occurs. And if this
quick look on S&Ps, and then we have to go. I have John Netto waiting for us.
Okay, so just another thing.
Okay,
so
go ahead.
I'm looking here this for potential wave C failure move to new all-time highs, and then this will complete this free wave rally for a wave B, and then this drop for a wave C. I mean, that would be probably something that I would definitely not be surprised, and probably something that would cause a lot of confusions, especially from sentiment perspective, because those who are longer-term investment will actually don't know what to do. I mean, whenever we go back towards 14,000, will you sell or will you still stick to your 30 or 40,000 target? So that will probably
vast majority of them are hodlers.
Yeah, so that's the problem, because they are
what about the S&P?
The S&P here, I mean, not really has changed since we've been here looking for this first leg down of minimum free wave drop. So either that will prove to be an ABC correction, then we continue higher. But if we just continue straight to the downside with very sharp aggressive sell-off, then I think that we should keep in mind this flat correction with nice supports around 3,200. I think that this is much more attractive level for potentially new bounce here on the S&P 500. For now, we are just extremely high here. So I think that we rather wait on pullbacks.
Thank you, mate.
Okay. Heal fast, Grega.
Yeah.
Thank you.
Sure.
You're doing good? All right,
yeah,
Wizard.
I'm doing good.
Yeah, and you're okay. So thank you, Steve. Wizard,
you,
John Netto. I'm going to get you set up. Hi, John. Welcome back to Face.
It's great to be here.
How are you today? Holiday mood?
Holiday mood, but you know, like everything, we're all traders at heart. So I think like you know, your previous guests were just talking about watching some of this sort of U.S. exceptionalism trade kind of come undone and what it's meant in terms of, you know, real inflation in the market, Bitcoin, oil, softs. So sorry, that's not much to share attitudes, but
do you want to share your screen, John? Have you ever used Zoom before?
I've used Zoom before, but I'm not on the computer that I have anything to share. I'm on my laptop to talk, but I have
okay.
my main desktop is in front of me with my 6 panels on it. So I'm just using my laptop to
then
talk.
I'll share.
Okay, cool.
And we'll go over some of the markets that
Sure.
you may want to talk about. So, John, can you tell our listeners, viewers, a little bit about how you got started in the industry? I noticed you were in the Marine Corps. Did it happen after you got out of the service, or tell us what your first
Sure.
job in the trading industry was, or and what you're doing prior?
Yeah, so I think my first job in the trading industry was when I was 8 years old and I was a bookie, and I started taking bets on sporting events.
At 8, huh?
Introduction
Really?
to risk. Yeah, yeah.
Wow.
And so I think, I mean, a lot of us, like, my suspicion is that many of us that are tuned in today, like, are doing this for more reasons than just the money, that there's a sort of primal aspect to our risk taking that's sort of been with us for much of our lives, whether it's, NCAA pools, fantasy football, you obviously have attendees from around the world in here, and so depending whatever your jam is, there's just a penchant to taking on risk. And I think, yeah, startups, exactly. So for me, like, that manifests itself in the form of sports betting. When I was for much of high school, I was a bookie, but I also, ordered my first, Wall Street Journal when I was 13 years old. And for context, I'm 45 now, so it's like 32 years ago. And the movie Wall Street, I think, I don't know, same with you, but that was sort of like my gateway drug to, like, the adrenaline that came from trading. Was watching Martin Sheen and that whole casting crew. Thank you, Oliver Stone. So
yeah, you wanted to be Gordon Gekko back then?
Well, yeah, or something like that. Maybe a hybrid.
Or Bud Fox.
Or Bud Fox. Yeah.
Yeah.
So,
Okay.
I mean, they're both pretty iconic, and so, I mean, in a more practical way, like, my trading career began after I joined the Marine Corps, and I was investing. While I'd been investing in high school and following the markets, and that wasn't entirely practical, but investing started after joining the Marine Corps. So you're talking like 1998, 99. I was stationed in Japan. I worked at the U.S. Embassy in Tokyo, and we were paid a SOFA allowance. So I managed to save a decent chunk of money for a 20-year-old at the time, and started investing it, buy mutual funds. Did well in 99, blew up in 2000. Got smashed on the tech sell off pretty good. Blah blah blah. Fast forward, I got the Marine Corps in 02. A member of NFA, started a brokerage firm, started a CTA, traded independently from 2011 on, and yeah, it's been several decade career, but that's that's the general background. We can get more specific, but surely.
So, what instruments are you involved in now? What do you mainly trade, John?
Sure, I work as a cross asset class trader. Follow your 35 to 40 standard futures markets insofar as your grains, energy, fixed income, currency, U.S. and global equity indexes, and now Bitcoin, which is my new favorite product to trade. I think, like a lot of people who are just intrigued by a market that sort of has that kind of energy, one way or another, more and more people have an opinion on it, and it makes for great trading, and it lends itself to some real opportunity. So yeah.
Okay, so what does the protean trader mean? What does protean mean?
Sure, great question. So protean means highly versatile, easily adaptable, and able to take on many shapes and forms. It comes from it's a derivative of the Greek god Proteus, who was the son of Poseidon. Poseidon was obviously the god of the ocean. Proteus could take on many shapes and forms, and so that word is derived from its etymology. Comes from the word to be highly adaptable, like a protean actor, a protean composer, a protean chef. So by protean trader, meaning that I'm not predicated or fixed on one strategy or one style. It's more about what the market's doing and to adapt with that.
Okay. All right. So why don't we talk about what the market's doing? So S&Ps, I have the chart up here right now, John. I mean, we're only about 30 handles, 40 handles away from new highs from the move. There's your picture.
Right.
What's your take?
Yeah. So my take is as a cross asset class trader and someone that looks to trade and really understand the market narrative, that this is not just about the S&P right now. This is about a broader U.S. exceptionalism trade coming undone And if you even look at a monthly chart in the S&P, just throw a monthly on there, even a weekly is sufficient as well. Go back to S&P, put a monthly on there, okay? And now if we can, let's put a monthly on the Russell 2000. I mean, you can see just how good the S&P has been, you know, going back. I mean, even we can put back 5 years. Perfect. There you go. So that's your S&P chart right there. Now take a look at the Russell during that time.
Okay, I have IWM.
Perfect. That's fine.
Yeah, good enough. All right.
Totally sufficient.
There you go.
Okay. So the S&P is obviously just, you know, I mean, big cap U.S. exceptionalism has just been the theme, and it's been the place that you want to have risk. And the message coming in the month of November and what we're watching right now is that trade, that possibly decade-long trade is now going through a reprice. And what we're seeing is not just with U.S. equities, but effectively what this incoming Biden administration blue wave, not total blue wave, but, you know, Yellen, kind of Powell, you know, Fed Treasury tandem, you know, potentially means is that it just the rest of the world's going to play some catch up, you know. And so if we look at, I don't know if you have like the FTSE in your or like the Dow Jones Euro stocks. But
I do. Yeah, they're outperforming. So does this make you a dollar bear?
Modestly, but the challenge. Okay, so if you think about like the last 30 years, all right, if I was to like tell you, okay, you know, the global economic leader of the United States is about to have a presidential and political regime come in that's going to be working hand in hand to print more money and you know, just blow up sort of modern monetary theory and just not blow it up, but just really put it in play and combine monetary and fiscal stimulus, you'd be like, wow, this is amazing. Where can we go? Okay, like, and so the first thing you're going to look for in the currency place, or one of the things that's driving your decision in terms of a weakening dollar, is like, well, okay, where can I pick up carry? All right, where's my next carry trade at? Okay, is it in the euro?
Ruble?
Ruble, okay, but that's not a bad place for sure to pick up carry. But
Real?
You can go there as well, but there's a definite emerging market political risk with those currencies. I'm thinking more like yen, you know, Aussie, pound, franc, and it's like when you look at a lot of those, the yield differentials between those major currencies is almost non-existent, and that's kind of the one dynamic here, which then says, okay, so then what would be weak or good for the dollar? And obviously, when we talk about the dollar, it's not just, you know, in a vacuum. It comes down to the cross that you're referencing the dollar with, and so, like when I look at like, you know, currency movement, I'm more excited about prospective volatility in inflation. You know, in inflation commodities, like look at soybeans right now. Look at corn right now. That to me, obviously, you guys just talked about oil. Okay, those are real inflation components there. Okay,
look at the beans.
Beans, perfect. Yeah, soybeans are perfect. Okay,
they're the strength. They're leading. There's corn.
They're leading, and they're leading on like real demand. You know, we know that there's like supply issues. We know that China is buying the heck out of beans right now, and what's in the pipeline is barely enough to sustain this, which is, you know, manifested itself in that price action. And so now if you take a, you know, look at that bean chart, look at that corn chart, now look at a Euro USD chart. Okay, like the volatility, you know, or the lack thereof, you know, for people in terms of the range that we're seeing. You know, look at that. Is that anything like the bean chart we just saw? Okay,
no, it's not.
Like that's a nasty consolidated chart right there. And when you have yield differentials as negligible as they are, I think that's going to continue unless you get one of two things. Okay, the first is that there's like this major economic outperformance. Okay, which then prospectively would put the yield curve, you know, that would dramatically steepen in either respective country, either the United States or, you know, throughout Europe, as expressed through the boons and the you know, Italian BTPs, etc. Or you get massive economic underperformance, okay, which would then, you know, obviously cause a major flattening of those yield curves in those respective regions, which would then again influence itself into the currency crosses.
So what do you think in higher or lower tenure? We bounced off 50. We stalled at the psychological 1% level on the 10-year. What are you thinking? Up to 150 or back
What I'm
down
thinking is
into
you can't.
lows?
What I'm thinking is you can't fight the Fed. Okay, so yes, the 10-year can range and then get a little bit steeper, and we are seeing in a practical way, like those commodities that we just mentioned, in terms of beans, in terms of oil, in terms of corn. So there's real inflation out there, and that explains some of the steepening of the yield curve this week, clearly. But we have a Fed meeting coming up, okay? And we know that the Fed is buying treasuries, all right? And so do you really want to like get too aggressively short the yield curve? Do you really want to play for too much of a steepening yield curve with the Fed coming up and likely going to announce more program because they want to control the long end and keep rates in the long end down? And they have no, and they are trying to stoke inflation, you know? And so at a practical level, and it's not just the Fed doing that, it's other central banks that are also gonna, you know, that are gonna sit there on the bid. Now that doesn't mean it can't still move around, but I think that's why, like, if you want to like find vol, like your relative value trades, your long Russell short S&P, your long Euro stocks short S&P, is going to have some legs because global portfolio managers with this U.S. regime are going to be allocating away from this big cap S&P 500, which has performed so well, okay? And they're going to want to pick up some real beta, and they're going to pick up beta in the form of the FTSE, in the form of you know, Italian stock market, the Spanish stock market, Brazil stock market, and so that to me is what I'm looking for. And on top of that, kind of throwing this Bitcoin dynamic, which has its own idiosyncratic aspects to it. But it's an aspect that is irrefutable insofar as that there is major institutional accumulation going on. And I mean, I think that at some level you've got to just have a piece of Bitcoin in your portfolio, because as someone who was long gold and felt that pain in the last month, you know, it was impressive Bitcoin's non-correlative value to everything else. And the one thing that will inspire global portfolio managers to own something is non-correlative value. Okay, so I think there's a couple dynamics powering Bitcoin higher right now. The first is just the broader adoption taking place that was not a part of the run-up 3 years ago. And then the second is the potential to hedge a portfolio with a non-correlative product, especially given, you know, what some of just the strength of risk parity portfolios in the last 10 years and how bonds and stocks have been, you know, in many ways gone through periods of extended correlation to each other. The fact that you can throw in an asset class, and it's still a very small asset class in crypto, that is potentially non-correlated and is also has a practical use case behind it, I think is a compelling buy in explaining some of this sort of parabolic rise of the last 2 weeks.
Okay. Are you in the, do you have a price? Are you in extreme? You know, I know some
No, I
guys
mean, I
are
think the
looking
short-term
for
price on Bitcoin is 25,000. You know,
okay. Right.
and that's, you know, we're sitting 19.5 right now, but I think you're 25 to 27,000 by the end of the year. I know when you first hear that, you're like, wait, you're calling for a 20% move by the end of the year, and it's not. That probably sounds extreme, but I'm not one of these like 60,000, 80,000 guys. Like we'll take it $5,000 at a time in Bitcoin, right? You know, like the thing could pull back to 17,000 by Monday. You know, and so I think tread lightly, be gentle. Don't be leveraged, you know, I believe anyway, put it in Bitcoin, you know, spec money, but I do believe it's going to become part of portfolios, and some even 2%, 4%, 1% allocation to it can have a profound impact on in terms of price appreciation.
Okay, well, what you talked about the little pain you felt with gold breaking down under a you know, it was about 1835,
Sure.
1840. Where do you add on to your gold position, John?
There's no adding on. I structured this through options, through a call spread to play a nice, you know, 4-to-1 risk reward ratio by buying the 1850, selling the 2000s, and structured around that. And that trade didn't work. And I just think, like, in the short term, the trade's a bit broken. If we get it,
so what do you do in a case like that? You just liquidate it or hope?
No, I've defined my risk with the spread. Okay, so that's what I do from the get-go. Is like there's no. I hope.
But you don't have to stay in a trade, even though you have defined risk. If you don't believe in it anymore, there's something to salvage, right?
Well, there's something to salvage, but I mean, I'm looking at the longer-term price chart here, and given that 85% of the value of it is gone, I'm willing from the 15% to play a bounce back up again back to
I
that
hear you.
1850 level and manage the risk from there. So, and that,
Okay.
and I'm comfortable with what that represents. I'm also, I need to sort of walk through the three dimensionality behind that trade as well. And that, that gold trade also played a part of being long the S&P, being long some of these other markets I'm referencing, and the rise in inflation actually, and the rise in those markets corresponded to that down move. So it wasn't like a one-dimensional one-off trade loss. It was part of a broader thing that, again, obviously you don't want to have any losses in your portfolio, but that probably gives some more color around the nature of that. And then holding on to this, that if it does reverse, could serve as at least a modest hedge for some of the other holdings that I'm a piece of right now.
Okay. Looking, you're talking about the end of American exceptionalism in at least financial markets and equities. Is that what's behind the NASDAQ lagging dramatically behind other indices?
It's a factor.
Things like Amazon and Apple, etc.
It's a factor in that. It surely is. And I want to be clear about this. Like, I'm not arguing for or against the end of American exceptionalism trade. What I am arguing, though, is that as a trader, I don't trade reality, I trade perception. Okay. And the perception with this administration is that these other markets, which have underperformed over the last 10 years, are now in a position to where they can catch up. Okay. And so I think, as you look at that perception, as you look at the price action, which is irrefutable in terms of supporting this narrative. Now, does it ultimately play out this way 6 months, 9 months, a year from now? Or are we back saying again, man, do you remember when in November, after the election came out, the market completely, overreacted and mispriced this end of American exceptionalism theme, when in fact, we come to realize that these other ancillary markets, couldn't recover, blah, blah, blah. They didn't quite benefit like we thought they would, blah, blah, blah. And so these are clues we'll be looking for in 2, 3, 4 months from now. But in terms of end of year allocations, in terms of like what broader global money managers are going to want to have on their books and what themes they're going to be playing, I think that this trend carries out until the end of the year. Whether it should or not is a different story, but that's what I'll be looking and playing for.
Okay, any thoughts or ideas on how this non-concession and the majority of President Trump supporters thinking that this election was fraudulent, how this plays out in America? Largely
inconsequential. I mean, I think if you ask me to, I do live in Las Vegas. If you ask me to make a number on whether Trump attends the inauguration, I think it's like minus $2 that he doesn't. And so that's, but I think more broadly, the market has accepted that this is what it is. In terms of asking that question with regards to civil unrest and could that potentially impact risk, the courts have, if you look at what Trump's lawyers, and as someone who's gone to law school, are arguing in court, it's a much different dynamic than what he's actually being, put forth in the public. And it's why, I mean, the decision from Michigan the other day effectively ended this issue. And the market is proceeding as if, and I think justifiably, that Biden will be the next president. There'll be a transition, smooth in terms of one administration being, helping the other administration with the transition. It appears that's going to be somewhat problematic, but overall, the market is going to focus on a Yellen-led Treasury and a Powell-led Fed that work hand in hand to provide the ultimate fiscal monetary thing. And that's going to be a hard theme for bears to overcome, even if there's some sound bites that come up from the Trump administration.
Okay. And your take on all the vaccine news that we've had in the last 3 weeks in a row, different companies.
Well, I'm not an epidemiologist, or I'm not a virologist or vaccinologist, and so it's hard for me to I read different things in different places, and I'm always.
Are you a proctologist?
I'm not a proctologist either. No.
All right,
although
buddy,
the market's done a few of those on me. Okay, trust me.
I knew you'd go somewhere with that. So, what do you think? Does that play into a recovery theme, or are people just a little bit too sanguine about it? And let me ask you a personal question: would you be vaccinated?
I think so. Yeah.
Okay.
I've read about the reports, and I think that they're viable. I also think the best thing is I live my life in a way that that I protect myself and fortunately so far haven't contracted COVID, and
Yeah.
just keep doing that. And when they come out and become available, I'm obviously not on the front line that's going to get them. Probably like third or fourth wave behind. I'm not in that demographic that's at high risk. So fortunately for that,
Okay.
and we'll just kind of play it by ear. But I anticipate that I'll have it, and probably need to get one 4 to 6 months later. Just because that's how this goes down.
All right, best position going into year end, if you had to pick one. The long Bitcoin still?
I think you got to be long Bitcoin. And
that's your highest conviction call.
Yeah, but also long Russell, short S&P. I mean, I think I think it's long. Thanks, Joe. I think it's long Russell, short S&P, and long Bitcoin. And if we get a pullback in soybeans, I think you want to own soybeans as well. I mean, I think that theme right there, we have real inflation, folks. Like, we have real inflation, and
you can't eat gold.
Not gold.
You can't eat
inflation
gold.
Play. Gold is not your real inflation play. Oil and corn and soybeans are your inflation. Palladium, platinum is your inflation play over gold. Look at your platinum gold ratio. Okay. For this market regime right here, those are your inflation plays.
Okay. Well, I'm thinking, I don't know what you think, but perhaps if we get risk off move, 15% or so in S&Ps, that perhaps the beans will pull back on some risk off just because of liquidity. You have to sell your winners too, so starting to get some diversion. I'd love to be able to buy him $1 cheaper here. So
I think,
go ahead.
I think that's possible, but I think like you can set up a call spread structure to kind of prevent, like yourself. I've been trading many decades, and
you like options.
Options, man. You just structure an option spread around this. Buy like your 1150, 1250, 1150, 1300, and then you've defined that so like you're not underwater on some nonsense or some weather. I mean, there's a lot of weather pushing this bean market around as well. And
so just put on verticals.
Put on verticals and define your risk, and then you can add the real inventory on a more sustained pullback. If you get $1 pullback in beans, then you can like hold a more inventory position. But up here, even with Bitcoin, and it's tough because the options around them are a different dynamic. But I think between corn, between oil, between beans, even you want to dabble a little bit. Like if you want to sell 30-year treasuries, on bounces, I won't sell new lows in 30-year treasury futures, but on bounces, I think you can offer into them, and you'll do okay because this inflation theme is going to put some pressure on the 30 years. I just don't trust the Fed to not. The Fed's on the bid.
Buy everything.
Yeah, the Fed's on the bid, so you just got to be cautious with that.
They're on the bid, and your broker is on the VIG, and your bookie. Right. So
everybody needs their piece, man. Everybody needs their
John,
piece.
It was really nice talking to you. I could tell you and I could talk for hours about things. So I want to wish you and your family a happy Thanksgiving, that you remain untouched, and like it or not, you go through an interview with me, you're now my trading warrior brother.
Hey, amen, brother. And if I could say, Unknown Market Wizards, Jack Schwager did a great job with that book. I was blessed to be featured in it. So if y'all can check it out on Amazon, Unknown Market Wizards.
That's you. You're in there, huh?
I am. I'm in that book. Yeah, I'm one of the.
Okay, because I interviewed Jack. So what were? Oh, the Marine. Now I remember the story.
Yeah. Okay. Monday's my favorite day. That was me.
Okay. Wow. Really a pleasure to have you. Maybe next time you could bring some visuals.
Yeah.
And we, and that way, you could be a little bit more, we could talk about areas of interest, support, resistance, things that you're looking at. And I knew your name sounded familiar, John. Congratulations. You're now not an unknown wizard.
I'm pretty unknown, trust me.
Yeah, but I'm saying, well, look, I interviewed Jack about his new book, and I didn't put it together until you told me, but his book's going to sell. You're not going to be unknown for long, buddy.
Fair enough.
You better put your 007 suit on and be able to slither
I
in
think
and
it's more like
out
my
of-
Dodgers T-shirt and my sweatpants. You know, I like a lot of people here. I trade from my living room in Las Vegas, and that's sort of what I, you know, it's a new world we live in.
What a
Yeah,
perfect
so-
place, financial Disneyland that it's perfect for an action junkie to live there, right?
Right. Yeah, exactly.
All right. Well,
Have a
John,
good one, my brother. Be safe this Thanksgiving,
Yeah,
okay? Good luck to
same to
everyone
you,
out
John.
there.
All right,
thanks,
buddy.
guys.
Thank you.
Peace. Yeah.
Bye-bye. Okay, that's a wrap, everyone. Remember, don't just count your pips, count your blessings. So that was a nice little surprise. John Netto, one of the guys that Jack writes about in Unknown Market Wizards. And everyone have a great holiday. You know, enjoy your holiday. And thanks for your support. And you know what I say every day is Thanksgiving Day, right? So don't just count your pips, count your blessings. And we'll see you guys. Well, I'll be here Friday. Have a great holiday. Adios.